Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a subdued start, tracking cues from U.S. equities. Investors await more clarity on a possible trade deal between U.S. and China. Bloomberg reports that the U.S. and China are likely to sign a trade deal later this month. China, however, wants over $200 billion worth of tariffs withdrawn before making any further progress. Automakers failed to make much headway in February, with total sales remaining muted. And Air Chief Marshal B.S. Dhanoa has said that the Air Force hit its intended targets in Pakistan, but he also said that it is not the job of the Air Force to determine the number of casualties. Let's now talk about the action on Wall Street. Markets ended lower as investors await the fine print of possible trade deal between the U.S. and China. The Dow Jones Industrial Average ended at a two-month low as expensive valuations also weighed on sentiment. Abigail Doolittle of Bloomberg News has this report.
Monday's Wall Street session turned out to be a ride in volatility, with stocks trading both higher and then lower. Lots of whipsaws, all of this around optimism on a possible trade deal between the U.S. and China, and then perhaps selling that possible news. At the open, the major averages, the Dow, the S&P 500, the Nasdaq, all up about 0.5% or more, and then at the lows down more than 1%. At the end of the day, we did have declines, although a big pairing of those losses. The Dow was down 0.8%, the S&P 500 down 0.4%, the tech-heavy Nasdaq down just 0.2%. So again, lots of volatility there. At the highs, that Nasdaq up 0.6%, at the lows down more than 1%. At the end of the day, pretty much unchanged, but to the downside. Now, relative to the sector composition for the S&P 500, more sectors lower, 6 sectors were lower, 5 were higher. Healthcare was the worst sector, materials the best. But the big point boost to the index, which again finished down just 0.4%, so a modest decline, included lots of those big tech and internet names, including Facebook, Amazon, Apple, Intel, and Alphabet. So investors still buying those tech names, those high-quality tech names. And there were some trade winners, too, including Cheniere Energy, up 1.6% on the possibility that trade deal could include China buying $18 billion of liquefied natural gas from Cheniere Energy. Caterpillar and Apple, which also have ties to China and the global economy, clearly those stocks rallied as well. But to the downside, United Health down 4.1% and McDonald's down 2.4%. That on concerns around first quarter comp. So at the end of the day, lots of volatility, small stock declines, bonds gained. That tells you that Monday's Wall Street session was not just volatile, but risk off. In New York, Abigail Doolittle, Bloomberg News.
And the early signs in the Asian markets suggest that risk-off sentiment has carried over to the Asian markets as well. But Rosalind Chin of Bloomberg News is joining us live from Hong Kong with all the latest updates. Rosalind, a lot to talk about today, specifically with updates from China.
Exactly right. There's a lot going on today, and we have had a lot coming out of China with the NPC kicking off and Li Keqiang giving his annual work report, which has been setting in terms of the economy target for economic growth, inflation, fiscal targets as well, and its policy for the year to come. So right now, let's take a broad look at how the markets are doing here in Asia. The MSCI Asia Pacific is losing about 0.5%. In China, the Shanghai Composite losing about 1/5%, as is the CSI 300. The Hang Seng Index also having opened just a few moments ago, down by 2/3% right now. So what has Lee been saying? Well, essentially, let's give you just a couple of the top lines. The first line, it's lowered its goal for economic growth to a band of between 6 and 6.5%. And note that a 6% rate of growth would actually be the slowest rate of growth in nearly 3 decades. And it's also given a cut of about 3% for value-added tax, which is aimed at boosting the support for manufacturers. Now, we did have Morgan Stanley saying that a boost of that much could, in fact, help the economy by up to $90 billion. So it is a fair bit of support for the manufacturing sector there and, of course, for the economy as a whole. But overall, things look a little bit gloomy here on the stock markets in Asia right now. There have been many, of course, other announcements out of this meeting, of which there are too many details, and in fact it's still ongoing, so we'll provide you with more updates as the day goes on. Needless to say, the markets in Asia aren't really that happy at this moment in time, and partly that's because any progress on the US-China trade talks doesn't seem to be going forwards at this point in time. And investors do seem eager to get more details now on what might come out of these talks, not just the fact that these talks may come to some kind of agreement in the future. So we've got the Nikkei topics and the Kospi all trading lower at this moment in time. In fact, broadly speaking, most of the major gauges across the Asia-Pacific are trading lower. We also had some data out from Japan with the composite PMI for February coming in at 50.7 versus 50.9 in January, and the services PMI a little bit higher at 52.3 versus 51.6 in the month of January. Also in focus, plenty more data coming up this week. We've got Japan GDP coming at the end of the week. And today we've got the RBA policy meeting later on Tuesday, so the RBA is expected to hold rates though, and of course it's got fourth quarter GDP out from Australia also tomorrow. So plenty to watch out for this week.
Thanks so much for that, Rosalind. Well, on to an update that Rosalind mentioned, in fact, and that's with regard to the talks between the US and China, the trade talks specifically. Fine print, of course, is expected to come in or is awaited by most of the market participants. But there's requirements that China has, or rather demands that China has put forth, that the United States roll back the $200 billion tariffs imposed on Chinese goods last year. This comes after reports, as we mentioned, that both nations are close to signing a deal as early as this month. Andrew Brown of Bloomberg New Economy Forum brings us this conversation.
The Chinese really, really want these tariffs, $200 billion of tariffs, to go away for three reasons. First, it's a direct hit to Chinese growth. It's killing the private sector. Record levels of bankruptcies. You're seeing defaults on bonds. You're seeing job layoffs. You're seeing smaller pay increases, and in some cases, factories keeping workers at home and giving them a minimum wage. So that has led to a big blow to business confidence. Business confidence is right now about as bad as it's been in a generation since the early 1990s, and general disquiet in Chinese society about slowing growth. The Chinese are used to rip-roaring growth year after year. They've had it for the last 30, 40 decades. Finally, this is all leading to a questioning of the government's stewardship over the economy. And don't forget, it's economic stewardship that is the bedrock of its political legitimacy. And even you're starting to hear some muted criticism about Xi Jinping's leadership. Has he aggravated tensions with the United States? Does he know what he's doing in what has been essentially reversing years and years of reform and opening put in place by Deng Xiaoping?
Right. So, I mean, that's a big issue, and that's something that China wants to get past, or Xi Jinping wants to get past it. Having said that, the stories that we are getting, the reporting that Bloomberg has done, has shown that perhaps we're getting closer to some kind of deal, which is such a contrast to what Robert Lighthizer said in the hearings last week. What's going on here? Is Lighthizer still leading the way, or does he have his own agenda and the White House just wants to get a deal as quickly as possible?
Right. So this is the point. For all the reasons that the Chinese want the sanctions lifted or want the tariffs lifted, the hardliners, and I would count Lighthizer as one of those, but also figures like Steve Bannon in the background, are very reluctant to give up the tariffs lightly. You have to remember, for the last 20, 30 years, U.S. trade negotiators have gone to China as supplicants. Please, make some concession. And now they're going to say, hey guys, what have you got for us? Because they know that these tariffs are hurting. So how do you get rid of these? They see not just an opportunity, but a historic opportunity, and perhaps the last ever opportunity for leverage in order to extract the deep, meaningful concessions on structural changes in the Chinese economy that ultimately. So the question is Trump going to go for a deal which is going to give him a short-term boost, maybe lift those markets that aren't doing so well, and is he prepared to do that and sacrifice America's long-term trading and business interests?
Well, that's the setup for the global markets. But let's go a little deeper into the Indian markets. Agam Vakil is here to set you up for the day's trade and also all that's happening in the futures and options space. Agam, good morning. Back after a long weekend, I'm happy. You're looking happy.
Absolutely.
Will the Indian markets be happy this morning?
Yes, well, Indian markets will certainly be happy to have you back this morning as well. But, well, as far as the markets and in general are concerned, we've spoken about some weakness seeping in Asia. And, well, that's likely to see some seepage in our own markets as well. down 17 points at around 10,830. Now, what's happened last week is, well, we did see gains, about 0.6% advance for the Nifty. The mid-cap and the small-cap indices also advancing, in fact, a notch higher and a step ahead of the benchmarks. So the case is the same for the banking indices too. The Nifty PSU banking index in this case stands out, considering a 2.6% gain there. But moving on to your ADRs, well, they're falling to a certain extent. So Infosys, Tata Motors clocking losses of around 1%. Dr. Reddy's near about there. And in terms of other ADRs, we have largely unchanged for HDFC Bank and Vedanta. But moving on to your FII flows, it was a day of trade where, well, the things were curtailed. The turnovers were relatively low, and FIIs and DIs really didn't have as much participation, which is also, highlighted by the gross numbers. But in terms of gainers, we have the usual suspects. Banks this time around, financials, HDFC, ICICI Bank, and IndusInd Bank were providing the bulk of their gains as far as the Nifty is concerned. But coming down to your futures and options space, and this is where we're keeping an eye on the Nifty, considering that short covering, the bow to short covering coming through, down 4% in open interest. It's the same for the Nifty banking. Actually, it is, and we've seen a gain in open interest for the Nifty banking futures. Keep an eye on that. Longs building up there. Now, as far as open interest is concerned, well, it seems at this point in time, Nifty is looking at an up move because of open interest in 11,000 is not as high, but look at the significant open interest around the 10,600, 700, and 800 marks. So a lot of support levels coming through out there. That said, when it comes to changes in OI, well, again, on expected lines, we saw about 10,800 and 10,900 see the maximum increase in OI. Moving on to your WIX, a decline of around 11%, now at 16.3, so keep an eye on that one. And we also have Nifty put call ratio, well, largely around the same levels at around 1.7, and the Nifty banking put call ratio certainly has edged higher to around 1.6. But in terms of other stocks, we're keeping an eye on something like Reliance Power and Arvind. Both of them have seen a lot of increase in open interest towards longs, as has Oriental Bank. And in terms of unwinding, I'm sure we won't have too many, but well, in this case, Hero MotoCorp, keep an eye on that one. It will react to its volumes today. And RDC and NHPC, among others, that we're keeping an eye on. All in all, it was a mixed day of trade, Alex. It was a very volatile week, as one might imagine, but it seems we are expecting some consolidation as we move in today.
Thanks so much for that, Agam.
Sure.
Well, let's now look at what's making headlines across the globe. Jessica Summers of Bloomberg News brings you the first word headlines.
More evidence is emerging that President Trump's trade war is hurting the U.S. economy. Two new studies say his tariffs are the most consequential trade experiment since the 1930s Smoot-Hawley measures that are blamed for deepening the Great Depression. Economists found that the impact of Trump's duties on the U.S. is in the billions and is being borne largely by American consumers. Canadian leader Justin Trudeau has lost another cabinet minister over an influence controversy that's dented his image ahead of upcoming elections. Treasury Board President Jane Philpott says she's lost confidence with how the government has handled the matter. Trudeau and his staff are said to have pressured the then Attorney General to end a legal case against construction firm SNC-Lavalin. And the Australian government is facing criticism for allegedly spinning data on carbon emissions ahead of elections in May, where climate change is set to be a big talking point. The Morrison government has been boasting how official data show a quarterly drop in emissions levels, but ministers have ignored the same data showing that emissions have been rising every year since 2015. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
Close on the heels of demonetization, they implemented a flawed GST. The design was flawed. The implementation was flawed.
GST was a Congress idea.
The Congress idea, but the design was not ours. That is not our design. In fact, you go back and read my speech in Parliament. I said, what is this? This is not GST. Call it by any other name. My president gave it a name, but I didn't give that name. I said, call it any other name. Why do you call it GST? This is not GST. GST, what are the two central ideas of a GST? One, it is a single rate. With whatever you don't want taxed, zero rated. It's a single rate. And second, it is a non-cascading tax, which means there must always be input tax credit and output tax liability. Now you've distorted both. You've distorted both by having multiple rates, and you're now removing input tax credit in many, many areas. If you remove input tax credit, we go back to the old cascading regime of sales tax, isn't it? I mean, the two central ideas of a GST have been thrown out of the window.
So you're going to have only one slab?
It'll be one rate, and one rate means what Dr. Arvind Subramaniam said. Yeah. It'll be in the transition period, a standard rate minus, standard rate, and a standard rate plus. But that's a transition. Eventually, it'll be one rate.
But Mr. Chidambaram,
I know it's difficult for people to accept it. They come back with this argument which the finance minister comes back. Can Mercedes-Benz be taxed in the same way as something else?
That's not.
I mean, that's a hackneyed argument. That's not an argument. If you don't want GST, say so and go back to the old system. But if you want GST, everything, there must be one standard rate.
What would that rate be?
It will be a rate which more or less approximate to what Arvind Subramaniam's report said.
Which was?
He said 14.5, 15. 15%. It could be lower if there's greater compliance.
There are a bunch of stocks that we need to look at today. Auto sales numbers are in for the month of February. Royal Enfield Eicher Motors sales down 14% at 62,630 units, which was less than the Bloomberg Quint estimate of 70,500 units. Then we have TVS Motors. The sales were up 3% at 2,99,300 units, which was higher than the Bloomberg Quint estimate of 2,93,000 units. Hero MotoCorp sales were down 2% at 6,17,215 units, and Bloomberg estimate was 5,90,000, so they were higher than the Bloomberg Quint estimate. Tata Motors domestic sales were down 3% at 57,221 units, below Bloomberg Quint estimates of 60,000 units. Then we have sales of VST tillers. Power tiller sales were down 41% at 1,495 units, and tractor sales were down 39% at 581 units for the month of February. Now, Tata Motor sales numbers look very good. JLR US retail sales jumped 29% year-on-year. Jaguar February sales were up 59%, and Land Rover sales were up 19% year-on-year. In SBI, frauds have amounted to rupees 7,951 crores during the first 9 months of FY19. All the accounts have become non-performing assets. For coal, India production was up 6.5% at 58 million tons. Sales were up 3% at 51.45 million tons. Mahanadi coalfields and southeastern coalfields led to the improvement. HT Media acquires 48.6% stake in Next Radio for 171 crores to derive synergy from FM operations of the company. And lastly, we have Jet Airways. Lessors grounded 6 more aircrafts due to non-payment, and the grounded aircrafts numbers increased to 25. Also, the fleet is now reduced to 99 aircrafts.
On the big brokerage calls for the day, first we have is Bajaj Auto, where Credit Suisse has downgraded the stock to neutral from outperform and has cut the target price to 2,700 from 2,950. Now, the brokerage is expecting Bajaj Auto's domestic business to face headwinds going forward. Now, it says that the company is currently pushing inventory of Pulsar before ABS norms implementation. Now, this combined with a high base from April 2018 could lead to a decline in volumes from April 2019, says the brokerage. Now, on the three-wheeler front, the brokerage is expecting a shift towards electric three-wheelers on the back of the government thrust and on the cost increase post the BS6 implementation. Lastly, it says that the stock trades at a steep premium to its peers despite this upcoming risk. Second note we have is from Jefferies on the consumer sector. Now, according to the brokerage, the consumer staples sector has outperformed against all odds in financial year 2019, and going forward in FY20, the brokerage is expecting the demand trends to continue for the sector and to remain stable, led by the rural segment. Now, for FY20, the brokerage is expecting the companies to focus on the top line growth and find new growth drivers, which in turn will lead to pick up an innovation and increase the competitive intensity in the market. Now, on the margin front, the brokerage is expecting the margins to increase given the limited cost pressures, and the only thing that could play against the margins could be the competition in the market, says the brokerage. Lastly, on the valuation front, the brokerage says that there is still stretch for the consumer staples sector.
Well, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories that are currently on the website bloombergquint.com that you should consider reading. First up, accounting firm Grant Thornton's special audit of the IL&FS Group has identified various financial irregularities in deals with financial implications of over 13,000 crore rupees. It has identified 29 instances where it appears that the loans disbursed to borrowers were in turn used by group companies to repay the existing debt obligations with IL&FS Financial Services. In news from the banking space, Central Bank of India has placed 4 stressed assets on sale, including Bhushan Power and Steel and SR Steel India, to recover dues of 3,321 crore rupees. The other 2 accounts are Alok Industries and Bombay Rayon Fashions. This is according to a document inviting bids that was uploaded on the lender's website. That's all you need to know going into trade today. For all the updates over the course of the day, do tune in to Bloomberg Quint Live and also log on to the website bloombergquint.com. Have a lovely day. This is Bloomberg Quint.